2022 was a wild ride for real estate, and history shows that volatility creates opportunity. And I believe the first quarter in 2023 is the time to capitalize. January's 28% increase in mortgage applications and active buyers running into multiple offer situations at a rapid pace indicates the opportunity window could be closing. So I want to share the data points and indicators I see affecting prices and what you should do to take advantage. Make sure you stick around until the end because I'm going to address the bombshell report from Goldman Sachs suggesting home prices could tank 25% this year. Before I dive in, it's important to note that this opportunity does not apply to every property or every buyer in the market. There's a link below where you can schedule a one-on-one consult to chat about whether this applies to you specifically and the area that you're considering. Discounted prices and seller concessions, meaning the seller covering your closing costs, are where the biggest opportunities are. Last year, home prices were selling at 102% of asking price compared to 95% today. So let's look at what's driving supply, then demand, and finally, I'll show you how to put this to work. One major factor keeping supply down is that almost 9 in 10 outstanding mortgages in California have an interest rate under 5%. So homeowners aren't quick to give up the low rate payment they're enjoying to trade for a higher one. That's definitely limiting supply. The media would have you believe a 41% increase in foreclosure listings means fire sales are happening everywhere. There are only 58 more foreclosures for sale in San Diego now compared to this time last year. So while it makes for a good soundbite, it's not the foreclosure wave of 2012 when we had almost 9,000 homes in that category. Same thing applies to outstanding inventory as a whole. Inventory is up 100% year over year. But keep in mind, we were jumping off a pancake. 2021 had the lowest inventory levels I've seen my entire career. And at the end of December, we were sitting at 1.2 months of inventory overall in the San Diego market, which is nothing. Point is, we still have a serious supply shortage that supports home prices. Affordability fell with interest rates rising this year, hitting its low at the end of summer, but as you can see here, it's stabilizing and even starting to improve with recent drops in interest rate and the decrease in prices. With inventory levels being so low, it doesn't take a large segment of the population to support prices, even in the face of lower affordability. Plus, we've had net positive migration for many years. The strength of our local economy with tech companies like Apple expanding their footprint here, combined with the military complex, medical and biotech, offering a wide range of high-paying jobs skews the impact of the affordability index. The biggest reason housing cooled off and affordability dropped was the rapid rise in interest rates, moving from the 2s and 3s in 2021 to a peak in the 7s in October last year. At the time of shooting this video, they're about 6% and trending downward. There's no question that the rise in rates influenced buyers' decision to wait, not knowing how high rates were going to go, which caused concern about how far prices would then drop. That's changing, and it's changing fast. That's because of indicators from our next topic, inflation. We've now received multiple consecutive reports of improvements in the CPI and PPI, which is the Consumer Price Index and the Producer Price Index, that are leading indicators of inflation. The data shows the inflation pace has slowed for the past 6 months. That means that the Fed raising short-term rates in such an aggressive manner has worked to fight inflation. That gives confidence to long-term bond investors. So even though the Fed is probably not done raising the short-term rates, the long-term rates are continuing to come down, and this trend is expected by many experts to continue into 2023. One indication of weak demand is falling prices. In 2022, we saw prices peak in the summer before falling in the winter, in line with interest rates hitting their peak. Year over year, the median price in December was dead even with last year at $765,000, and the average sale price for the same time period was up 2.3%, coming in at $977,000. So a pretty flat year for prices as a whole. Given the increased cost of borrowing that we saw last year, the stable home prices tell me that demand in this market is still very strong. One place that demand comes from is rent increases, which cooled off a bit in 2022. However, before you get excited, we were coming off a year of increases of almost 20%, so the fact that rent still rose is not worth celebrating. Rents are still rising at the moment, which only makes becoming a homeowner more attractive. We're starting off the year 2.2% higher than we started in January 2022, with median rent at $3,250, if that gives you an idea. That's only going to support demand for renters who want to buy houses that have good jobs, good credit, and no plans to leave San Diego. Now, this next one doesn't get talked about enough. Wages. We get caught up in negative aspects of inflation, but wage-based inflation isn't a bad thing. And wages climbed last year at a considerable pace. According to the largest payroll provider on the planet, the workers staying at their job saw wages increase about 8%, where job jumpers saw an increase of about 15%. That means more money to spend on the house that they're renting or buying. Aside from fundamentals, we have to look at external factors for supply and demand. One of the two I focus on is institutional money, who are currently investing giant sums of money in real estate. Blackstone started a fund at about $25 billion that is swollen beyond $70 billion at the time of the recording of this video. That's buy and hold money. So is JP Morgan Chase, who's investing $1 billion to construct rental properties with national builders. I don't suggest betting against the big boys because most often they get it right. Sometimes they get it wrong, but they always influence the market. Speaking of institutional money and sometimes getting it wrong, Goldman Sachs dropped a controversial report suggesting that San Diego prices could fall 25% in 2023. The media just picked it up and ran with it. I was just as shocked as most of you, as I read every article that I could possibly find, but I realized one thing was missing: any justification for the prediction, as in literally zero support. I'm not saying they don't have any, but I found it curious why they would make such a claim without any explanation. Maybe the company riddled with scandals has an ulterior motive? I don't know, I'm not sure. But the rapid shift we're seeing in buyer activity does not support their position, that's for sure. So now for the good part. How do you put this into use? Well, what we know is supply is still limited, interest rates rising affected prices, but those rates are now on the way down, and institutional money is buying. Big time. To stay ahead of the curve, the first step is to put yourself in a position to be opportunistic. That means get a pre-approval from a lender so you can establish your buying power and get familiar with your numbers, like payment, down payment, and closing costs. And develop a financing strategy. Developing a strategy is mine and my team's specialty, so use the link below to connect with us to dial in yours. Then you need to partner with an experienced realtor with strong negotiating skills that focuses on the area that you intend to buy. Let them know you'd like to first focus on any properties that have been sitting on the market or other sellers that are motivated but haven't listed their homes yet. You see, just like I mentioned earlier, last year homes in San Diego sold for an average price of 102% of list price, where now homes are selling at 95% of their asking price. That 7% is where you're going to find those discounts. And it's a super solid realtor that's capable of both finding and negotiating that deal. Let me know if you need any help identifying an agent like that. I can connect you with one that I'd trust with my personal home purchase.